Welcome back to Hustle to Holdings, where we explore how people turn hustle into long term ownerships. Today's guests bring a powerful dynamic to the show. They're a husband and wife team who made the decision to many people talk about, but few actually take. They left their corporate careers to go all in real estate, specifically hotel investing. They've navigated the risks together, built a partnership, not just in life, but in business. And today they're under contract on two hotels, one in New York and one in Florida. This episode is about courage, alignment, and what it really takes to make the leap from stable paychecks to full-time ownership. Liz and Tom, welcome to Hustle to Holdings.
Thanks for having
Yeah.
us.
So let's just talk about your corporate careers first. Tell me a little bit about what you guys did before hotel investing.
Yeah. So we worked and where we met, it was in Ernst& Young, and we both worked in the structured finance group. So asset and mortgage-backed security type work. So, all that fun stuff that led to the great financial crisis back in '08, '09. On the back end of that, there was a lot of more of like regulations that came in. So we helped do a lot of like third party due diligence, fun things like recreating bond cash flows, and then also reviewing the offering documents that went out to the investing parties.
Okay, awesome. I bet that really helped when structuring deals then for hotels, right on the underwriting portion.
Yeah, absolutely. That was kind of our kind of prelude into everything, understanding how things like cash flow kind of works as a whole, but also some of these like key metrics like DSCR,
Yep.
net operating income, and things like that. Just it was a good like prelude into everything, and I didn't really foresee how that was going to play out in one way or the other as far as the investing side of things go, but definitely helps now that we're on the other side here.
Awesome. What about you, Liz?
Yeah. So we started working together in structured finance, but then I
Okay.
switched to consulting because I wanted something a little bit more dynamic and didn't want to feel like I was stuck in the office all day long. So I chose consulting, which was a little bit more dynamic with like traveling and everything. So I focused with the financial crimes department. So
Okay.
the financial crimes compliance department, meaning like I would work with banks with their KYC and all that good stuff. So yeah, that's kind of how it started, and I'll transition a little bit as to what happened, right? So for me, at least, it was a lot of traveling. And in the beginning, it was super fun. But then when we started getting serious, I started thinking, what am I going to do? Like when we have a family, when we have kids, like, well, I don't want to keep traveling. And I know a lot of
Mhm.
people did it and they did fine, but it just like didn't suit me. And that's kinda like where we started talking about what's next for us. And Tom had always talked about real estate and bigger pockets, and I had literally 0 knowledge of real estate whatsoever. And he started telling me, "Oh, you should listen to Bigger Pockets." So at the time, I lived in the city,
Nice.
and I remember walking my dog and, like, listening to Bigger Pockets and, like, listening to all the stories. Obviously, you hear a lot of the highlights, and they seemed really interesting and super cool, and that's when started like, the little bugs started biting.
Good, good. It took me a while to get my husband into real estate investing as well, but I also started learning from Bigger Pockets. That's actually a big reason that I started this podcast because it helped me realize, like, hey, if these people can do it and, they've had a background very similar to mine, why can't I? So
Exactly.
podcasts like that and learning other people's experience really inspired me to start my own real estate portfolio. So what was your first deal then? What was your first, I guess, deal into real estate?
So anyways, we were in New York, and I
Okay.
was like, "Let's do it, Tom. Let's do it. Let's invest." And he's like, "Are you sure?" I'm like, "Yeah, let's do it." And obviously, when you're looking in New York, the prices were a lot higher, and we still wanted that stability that we had built for ourselves as W-2 workers. And we also, it was like in the middle of the pandemic and everything. And we were like, well, maybe we should look into moving somewhere else that, we could start our career in real estate investing. And so we moved to North Carolina. We moved to Charlotte after doing a lot of research to see what the market looked like. And the real estate market in Charlotte was booming. New York was still going through a lot because of the shutdown and everything. And in the South, things seemed a little bit better. So it was almost like a breath of fresh air in the moment that was like super chaotic for the world. And we moved to North Carolina. So we moved to Charlotte, and that's where we started. And I'll let you talk about the first first house.
Yeah. So Liz left her job at EY and just kind of went head first into leading the charge for us. So
Yeah.
Awesome.
she was kind of our general contractor slash project manager slash interior designer. She was our do it all. I kept a W 2 job, just being a duo. Like, hey, let's have a
Mhm.
little stability, just because coming from corporate backgrounds, we didn't know what we didn't know. So we just wanted to leverage everything just in case things kind of went upside down for whatever reason.
Smart.
So we moved down there, and Liz was, really gung ho about let's get a deal, let's get a deal. We had to kind of refine our strategy as far as what we wanted to do, how we wanted to approach things, if we wanted to flip, if we wanted to burn, what type of asset classes we wanted to go through.
So I think essentially what he's saying is like I was driving him insane, literally.
I do the same with my husband too. Trust me, girls. This is the first time that I hear someone else that's a woman driving her husband insane to go into real estate
Yeah.
investing. It's not much of us, but we did
I
it.
know, right? We could do it.
We
And
could do it.
funny because I was like just ready to pull the trigger, but
Me too.
it was just like any trigger. I was like, let's just buy a house. We'll figure it out. And I'm really glad that I have somebody to pump my brakes sometimes because like Tom was like, because he has a spreadsheet, of course, with his background and everything. He has
That's great. You needed that.
spread. And so he was crunching numbers like, this doesn't work and this doesn't work. And I'm like, but Tom, but this is a great opportunity. I mean, because I think that I was seeing more so from a design standpoint, what it could be, what the market was. And
Right.
things like the houses were selling like hotcakes. It was incredible. And I was like, I have FOMO. So I didn't want to, I don't I'm missing out. And I felt like I was missing out for every single house that we didn't put a bid on. So yeah.
So yeah, Liz put in some bids on houses that I didn't necessarily agree with. And thankfully, those things didn't work out. But when we first moved down there, Liz had expanded her network, and she met a couple of folks that did some like off-market deals.
Nice.
So one day, after moving down there, we were there for a couple of months. We explored some of the submarkets outside of Charlotte, got really familiar with them. Knowing what the ARV would be on particular houses in certain cities and zip codes and stuff like that. So one day she gets a phone call from one of her friends who's like, hey, I know you guys are looking for your first deal. This is the perfect one for you. Like, but there's someone literally on the way to try and sell it to someone else right now. So you guys have to make a decision within 5 minutes or else you're going to lose out on it. So thankfully, kind of having that background in the months of kind of prepping, and was able to pull out my handy dandy calculator, plug in a few numbers here and there, and we ended up buying it sight unseen. So that first deal was for $60,000. And for me,
Wow.
being a little bit more conservative, right? It was just like, all right, $60,000. If we go belly up for whatever reason, we're young enough, we can figure this out. Like it is what it is. But we bought it sight unseen for 60 grand. And coming from New York, I was like, the fact that you could buy a house with a piece of property, like a little bit, like about an acre or so for $60,000 just kind of blew my mind in all together. But that was our first little dipping our toes into real estate there.
That's crazy. Wait, 60 grand all in. That's it? And you own the
That was the
house
purchase,
or?
that was the purchase price. We purchased it, then we ended up like getting like a hard money lender to kind of fund that so we can pull our
Okay.
money out. We probably put in, I think it was like another 15 or 20 grand,
Yeah.
and as far as like renovations and everything goes.
Okay.
So let's just say we were all in like a little over 80 grand or so. But when we did the cash out refinance, because we were using the Burr method,
Mhm.
it pays for about like 120 or so.
So how much was your mortgage and how much did you rent it out for if it's Burr?
Our mortgage, to this day, it's maybe like 550 or something like that. And
Wow.
we like to push the market a little bit. So we ended up like resetting the rental rate in that particular town and the area itself. And I think the first time that we put it up for market rent, it was a little over like 1,000, maybe like $1,100 or
Wow.
something. So it was a nice little cash flow for us. And at that point, we were just like, okay, like where's the next deal? Like
No, right?
in a sense of like, well, this is real. This is working. How do we get more and more of this?
Yeah.
Nice. Okay. So for what about did you grow your single it was a single family home or was it a duplex? Single
It was
family.
a single family.
Okay. Did you continue buying single family after that?
Yeah.
Yeah,
Okay.
so that one was like a little shoebox. It was like 500 square foot or something, 600.
625 square feet.
It
Thank
was
you
so
very
tiny.
much.
I
Uh,
mean, that works though. You still get cash flow out of it.
Oh, great. And one of the things that I feel like sometimes it's important to note is that whenever we had other investors come in and like look at the house, they were like, "How much are you guys renting this for?" And I think it was like 1,050. And they all said, "You guys are crazy. That's too high for the area." And Tom and I looked at each other and we were like, "Okay, like what are we supposed to do?" It's already like, we had already decided and everything. And I think sometimes it's important just tune out the noise, and they were
Yep.
wrong. And, there's a chance that they could have been right, and that's fine, but it's just like up for us to decide what makes sense and what we
Right.
that it would go for. And it was like literally zero problems to rent that place for 1,050. And with the years, we've been increasingly
Increasing
Yeah,
I'm
the
the
sorry, yeah,
rent, right.
increasing rents, like, little by little, but yeah, so it's just, that was a lesson there, but when we were finishing that one up, obviously, that we were a little bit in a hurry because of the interest rates were so low. We had
Mm.
already not me, Tom, had started looking at houses for our next project.
Nice. So now it's switched. Now Tom was the one that was like, "Let's get the
yeah,
next."
Ish, ish.
ish.
We were very, how do I say, like, diligent when it comes to, like, planning next steps. So
Okay.
we had, like, our sessions that we would just talk about, like, what are the things that we wanna do and what's the timeline. Let's keep ourselves accountable and, straight to that deadline. So we had very aggressive targets, and I think that's kinda like, at that point, we're both working towards our deadlines,
The
which
same
was
thing.
yeah.
Yeah. And that's why you've accomplished your goals because it's two heads working towards not just one, right? And you have to
Yeah.
drag someone along, but it's both of you. No wonder you guys made it under contract for two hotels already because it's both of you working towards it. And you did say a very important lesson that I do want to reiterate to the audience. When you have a house, because I had the same experience in which my husband and I we bought a house in Jacksonville. The rents there were going for 1350. We moved in, renovated the backyard, and we put it up for 1800. People were like, "What do you mean? The highest rent there is 1350." Within a month it rented out at 1800. So
Yes.
the lesson is put it as high as you think it should based on the market, right? Still
Mhm.
try to put a little bit higher because at the end of the day, you need to create little renovations that make it worth that price. So for us, we put fake grass in the backyard. We put a little we just made it really nice. We put lights on the top and everything, and then we just left it there. If it doesn't bite after a month, let's say it's 1800 and it didn't rent, okay, lower it to
Yeah.
1750. And then
Right.
just lower it until you get something, but don't be scared to put it at a high rent and see what happens. And obviously pre-screen your tenants. So I love that you guys also went through that experience. So you block out the noise and follow your gut. So thank you for that. um and how did this turn into hotels? Tell me about how that shifted for you guys.
Our second property was another single family rental, a small one. And then, so we kind of divided our lanes, right? So as I said
Mm,
before, Liz was kind of leading the project management, design and everything like that. I was more so doing the acquisitions and the financing on the back end, and then eventually property management with placing the tenants. So when it came to property number three, we were like, we met another group that was talking about Airbnbs and doing things like that. And for me, like it just didn't really resonate. But when they were like, "Hey, you could basically make like three times the revenue by doing an Airbnb versus doing a long-term rental," I was like, "Okay, let's give this a shot." Like,
you're
Good
like,
idea.
you know what, maybe I like it.
Yeah, maybe sounds great. And I love the idea of creating spaces that have more of a voice. I was, a little bit turned off when Tom was like, well, let's do long-term rentals because I wanted to flip houses in the beginning. And then he had to dig in a little deep as to like what my motivation was to start flipping houses. And we got into, I really like to make places really beautiful. So when the idea of doing Airbnbs was like a good combination and knowing that the cash flow would be better than the long-term rentals, that's when we're like, all right, maybe we should do it.
Hmm.
so we got into Airbnb, did really well with that. We had a couple that we've been managing for the better part of 5 years at this point. And just kind of skipping along the journey a little bit here, we purchased a commercial building. That was our last acquisition back in 2023. It was a commercial mixed use building. So that was also our transition from residential over to commercial. And after we
Okay.
did that, we were like, whoa, we really like commercial, like way better than how residential is just valued overall, how much easier it is to kind of get loans and some of the nuances with it as far as
What
like,
type of building was it? Sorry about that. I just wanted to go back into your first commercial deal. I didn't even know you already invested into commercial beforehand.
yeah, so it's a commercial mixed-use building. It's a triplex. We have two long-term tenants on the bottom, and then like a unique kind of space up top as well that we
Oh, cool.
transitioned to. So we made that transition. We really loved the whole process of commercial over residential, but then we took a little bit of a pause when we found out that Liz was pregnant with baby number two. We ended up moving from Charlotte back to New York, and just wanted to be closer to friends and family, and just really focus on being mom and dad for a while. So now the kids are a little bit older. They're in school. We have help at home. So last year, we're like, all right, let's start really focusing on scaling up the portfolio again. And we knew that, again, because of our experience from commercial, we wanted to stick with commercial, but at the same time, we really loved the short term rental hospitality space, creating these unique stays and experiences for our guests. We've done really well with, being super hosts and, hosting 400 plus, stays at this point. But we also didn't want to scale individually on the residential side. So we put our brains together and we're like, all right, hotels and motels kind of make sense. So
It
then,
yeah, it seemed like the natural transition based on the
Yeah.
things we like to do because I think that at the end of the day, if you're gonna be working on something and, for us, like it's time away from our house, from our kids, we might as well just do something that we really generally care and love doing. And creating these spaces, creating the environment, creating a brand, it's just so much more fun than trying to hustle a lot with, like, little houses and doing Airbnbs. It's just, like, it's a different grind that it just
Yes.
didn't seem like a natural growth and transition for our business. So then we were like, "Alright, so we still love the hospitality aspect of the business, and we still love real estate. How can we do this in a different way?" And it's a different kind of work, and it's still very hands-on, but it's just, like, something different than, like
Nice.
a bunch of little houses.
No, that makes sense. Trust me, I'm also transitioning into the hotel space because I also like the income of a short-term rental, but there's a lot of restrictions too. A lot of restrictions when it comes to short-term rentals. So that's already a risk in itself. So might as well, my thought was, why buy short-term rentals when I can just buy a hotel? And it
Exactly.
makes sense.
Yeah.
So tell me a little bit about your commercial. You mentioned that commercial is easier to get financing for, and a lot of people don't believe this, than
Mhm.
residential. So tell me about how you got financing for commercial, how that deal worked out.
yeah, so we had just, actively been working with other banks in the, North Carolina area, just as we were kind of converting from our hard money loans into traditional mortgages, just trying to see, what was all available to us. So we found a local bank that was in the area, and over, a few years' time, made a relationship with one of the bankers over there. And I think it was maybe in 2022, I sent over, our entire background, and he was going to do the kind of like a portfolio loan for us to refinance out into like multiple deals into like one loan. We ended up not doing that, but when it came time to the commercial property, I picked up my phone. I was like, "Hey, Mark, like, we're looking at this property. Is this something you lend on?" He's like, "Absolutely." And since he already had most of our like underwriting materials, like tax returns and stuff like that, that expedited the process as a whole.
Nice.
But one thing to kind of think about as far as commercial versus residential goes, when you look at residential, a lot of times it's just valued by price per square foot. So meaning that, you're kind of restricted to, all the other houses that were sold recently within a mile,
Mhm.
5 mile kind of radius on that. But when you're looking at commercial, it's more viewed as an asset, right? As an actual business that's producing revenue. So when you have things like net operating income, and you could say, hey, this building's bringing in, X hundreds of $1,000s a year, you look at what the cap rate is in that local
Yeah.
market, and now you kind of figure out what the actual value is for that. So the banks are viewing this as an actual kind of business that's producing revenue versus like a home use type of thing.
Okay. And then what loan products were you able to get? Did you use an SBA, DSCR for the commercial?
That was just a traditional, commercial mortgage loan. So
Oh,
it was, like, amortized over, I wanna say, like, a 20-year, period, and we have a 7-year balloon on it.
Okay, and how much did you put down for it?
I think we
The
did the total LTV was about like 65%, so, a couple
Okay.
hundred thousand down.
Okay. Okay, that makes sense. So then how did that transition into you did are you still in your W-2 or did you officially leave?
No, I'm officially gone now, so we're both, full-time into this.
Yeah.
When did that happen?
That happened, almost a year ago to the date at this point.
Congratulations! When did you decide to make that decision then? Like, when were you like, "You know what? It's ready. It's time for me to leave."
Yeah, it was just a number of kind of factors. It wasn't serving me anymore. There was a little bit of friction, and the universe just kind of pushed me
Aligned.
towards the way as well. So sometimes you just have to like listen to the omens and how things are kind of shaping out for you. And as far as scary as it could be, sometimes you just have to make that jump and go full time into it.
And how has the transition been now that I didn't even know that you guys had kids while starting your real estate portfolio? That's a whole nother job within itself.
Oh my
So
God.
how did you manage that family and real estate investor life? Like personally, I'm waiting to get my hotel before having kids because I can't imagine myself doing both. That's hard. It's difficult.
Yeah.
It is for sure.
I remember when I was pregnant with my first one, there's a point I was heavily pregnant. It was in the summer in the South, and we were working on 6 houses at once. And
Wow.
somehow, I don't know, but I just had a lot of energy. I've always been a hard worker. Like, I love to work. This is like what drives me. I feel
I
like if
could tell.
I'll literally go insane. So it was really interesting. But then when he was born, I just felt like I had a bit of a wall, motherhood like just completely changed me and how I valued my time and the things that I wanted to do and not sleeping. Obviously, that was a big thing. But with one, it was manageable. And then when we had the second one, that's when we're like, all right, we need to calm down. We need to pump the brakes, get ourselves situated. And and then we'll figure it out. So then last year, that's when the little bug started biting again. I was like, Tom, I need to get back to work. I need to start doing something. And then we aligned to get the help and everything. But honestly, to say that there's a perfect timing, I don't think there's ever going to be a perfect timing to do things. You
Mhm.
basically make your own timing. And it doesn't mean that's going to be easy. It just means that if you're committed to it, you make it possible. And I think that's something that we've been doing since we started. Like we didn't know anything about real estate investing. All right, then let's learn. And we don't know about this. And I think every time that there's a gap on something, it's really up to us to go in and fill in the gap with knowledge, time, and resources and mindset, and you name it. We just have to make it work.
What tips do you have for anyone who's listening, right? Who wants to bring their partner along within a partnership because sometimes two heads aren't really aligned. So, what tip do you have when working together on a business as a husband and wife team or bringing someone along with you to be with you in this?
I think that, quite honestly, both people really must want it really bad. And
Yeah.
even then, there'll be days that you don't want to do it. And that's okay. It happens, I think, in any business partnership or, whatever you're committed to more than one person doing it. But I think from my perspective, it would be make sure that you're aligned with your partner. If your partner doesn't want to do it, don't force it. It's not going to work. But if your partner is interested or maybe scared, maybe that's something that, it can be worked out. But I think overall, just like as long as both people want to go in the same direction. It doesn't mean at the same time, but at least like have that as a goal and then work through the kinks of the differences and, we're very different from one another. So I think in the beginning was really hard. I was like, I remember I had a coach at the time and she would say, just, embrace the difference, embrace the difference. And it sounded so great and zen. And I was like, I don't know how to do this. But now I generally do see it as like, I can't do it. But if I have somebody who complements my strengths, who aren't my strengths, then it is embracing the difference and understanding everyone's strength and weaknesses. I think that's the biggest thing. But that's on my my take. I don't know, Tom.
No, I would agree 100% as far as alignment goes, right? So, like, if you want to get into real estate investing, that can mean a plethora of things, right? And that's kind of where we found ourselves in the beginning, right? We moved down to Charlotte to get into real estate investing. As I mentioned before, Liz was putting in bids on houses, on failed clips of people that tried to, they lost like 100 grand on it, and they were still like down to the studs, or just maybe drywall was done. And it was just like, why is this not flowing for us, right? I know I'm a little bit more conservative, Liz is a little bit more aggressive, but why are we not like making this work right now? So I remember we went on a walk with our dog one day, and I was just like, Liz, like, why do you want this? Like, what is it that like you enjoy the most about it? And it came down to like design and making places look beautiful. I was like, all right, so like, what if you can still do that, but we can do it in a way that will still make money, it's a little bit more conservative, and works like to serve us versus taking on more of a risk. And she's like, well, I don't care what it is on the back end. Like, you manage that. As long as I get the design to look pretty,
Just give
that's
me a
great.
house.
And I was like, great. And then like, a week or two later, like that deal came into our laps, and like we're like, all right. So it was really just getting into alignment as far as what drives each person. And also from my perspective, like, staying in your lane. So like I do the acquisition, I do the financing, I do the property management, and Liz does the design. She deals with like like the subs, contractors, and project management as a whole. So it's just like knowing that like, all right, sometimes I want to put an input on design, but at the end of the day, Liz gets, the final say on that because that's her lane. And I have to respect that. And I love that because she does a great job. And it was up to me, everything would be from like Home Goods or TJ Maxx, and it'd just be very so Liz is very good at, coming outside of the box, making these unique styles and stuff like that. So that's her talent. I have to respect that. But it took us a little bit of time of figuring out like, where we were going to kind of serve, or else you could just be stepping on each other's toes and not making any progress at all.
Love it. I love that. You guys are a great team. I can already tell. She's the creative head, and you're the one. It's just like we need to meet because my husband is the same as you, and I'm the one that's like, let's invest, let's buy properties, and then he's here putting up drywall with me, painting, and he's like, hold up, please, like at least make commission this month, and I'm like, fine, fine. So I love to meet you guys. I think you and my husband and I are very similar. So you guys started with the buy and hold strategy, right? And then you moved on to commercial, still buy and hold strategy, correct?
Yeah.
Yes,
And then now instead of getting into Airbnb, you want to do hotels. Is that correct?
correct.
Okay, great. So it's literally the same path that my husband and I are going because I feel like for me, buy and hold rentals in the beginning were safer to
Right.
replace my income. And then now that I'm looking to create a business out of it, I agree with the hotel space just being able to increase the income while also having a business out of it because I also love the design portion of it. We're in Florida, so we're also looking in Florida. So tell me about how you learned about the hotel space because it is a whole nother world, and how you got into contract within the hotels that you're into contract now. Did you close them already or they're still under contract?
Still, pending.
Okay.
Our closing should be coming up for this first one here, at the end of this month, beginning of February.
Yay, how
No,
exciting.
we're treading over there real quick. But gratefully we had that first commercial deal under our belt, so we were exposed to the commercial world, how the financing,
Nice.
the appraisals and valuation process works as a whole. But we found a group of advisors that was super helpful for us as far as just giving us a little bit of more, hand holding as far as getting into doing the underwriting specifically for hotels versus just commercial building as a
Yeah.
whole, giving us a little bit more as far as their playbooks go, as like training and placing a GM and stuff. So it's not like we were going completely blind, because going from like a, 4 or 5 bedroom single family house is an Airbnb versus a 27 key hotel is a different beast in and of itself.
Mhm.
So we found that, and that was super helpful. But it was kind of the same process, honestly. It was, we kind of figured out how these things should be valued in the particular markets that we were looking at, did our underwriting, and just kind of let it shoot, more or less.
Yeah, and then I think one of the for me at least, like, was a interesting way of, like, getting knowledge was through so Tom had started looking at different hotels, and one of them we put a bid on, but we didn't win. But he had the idea. They were running the hotel so nice, like the operations were really you can tell it's on point. So he just approached them, "Hey, are you guys willing to, like, I'll give you a little bit of a fee of consulting fee, and then are you guys willing to teach us?" And they were so happy because that's another way that they're branching out their business. And they're like,
Smart.
"Yeah, of course." And literally, they gave us so much information, probably worth a lot more than they charged, but it was amazing. And, I think that we go in knowing because there's a lot of like little details in the hotel space that I think that because there's so many keys, even 100,000, I mean, 1,000 dollars makes a difference because if you're, scaling that to 20 keys, that adds up. So they were very generous with the information that they shared, and all the things that we've learned. So that was kind of like a unique way that we got additional knowledge too.
That's amazing. That's amazing. No, and anything that's mentorship or any knowledge that you get is so critical when it comes to commercial deals. Do you guys have partners or is it just you two in these hotel deals? Did you have a partnership that you're working with or no?
So we've done everything ourselves, historically, funding using our savings and converting that or using hard money loans, converting that into mortgages. We
Mm,
brought on a couple of like friends and families as investors for our commercial deal that we have, but now it's just kind of like the first time of us thinking about raising capital, right? Because
okay.
these things are a little bit more money than your average house goes for, so it makes it a little bit harder, if you're not super loaded to just come up with this money over here and, you still have restrictions with commercial financing, right? Unless you have seller financing or something creative in place. Typically you can only go up to like, I don't know, 75% loan to value unless you're doing like SBA route. Um, so yeah, you're like, all right, now we have to start raising capital. And that was a whole nother ball game for us. So we started doing that, but at the same time, we got some feedback and we are like, we're giving away a big chunk of equity here. We're going to be doing all this, sweat equity and all the work, which is great. We're happy to, bring on partners and give them a premium and respect their money because of that. But is there ways for us to also take out a little bit more leverage and potentially just retain most, if not all,
Mhm.
of it as a whole. So that's kind of the route that we've been looking towards right now, just to try and keep that ourselves, just because um, we're building this for us, we're building this for our kids. So having a small slice of the pie is great, right? I'd rather have a small slice of something bigger versus a big slice of something smaller. But we're hopefully this would be something that we could hand down to our kids one day too.
Yeah, I mean, that's the goal. I think that real estate in general, it's about building generational wealth. And that's why I say, it's long-term holdings that you can pass down to your kids. Your kids have something in case, you're not here anymore or just for the future in general to pass down generationally. So that's really what intrigued me about real estate as well. So are you doing syndications? Is that
Yeah,
what
so
you're doing or
we
investor
went on
groups?
the 506C route just so that we can
Okay.
talk about it publicly, and we don't want to get into any trouble with the SEC or anything like that.
Of course, of course. So tell me about these hotel projects then. Let's see if we can get some people interested right now. So what are you looking to do? The one that you have under contract in New York, right? Is it boutique or are you branding it? What's your strategy for this hotel once you
Now it's
buy
a
it?
boutique. It's a 27 key in the Hamptons. So I think that's
Nice.
part of the reasons why we also are very passionate about it. We love it, and we love the location, the potential of the property itself. It's a very beautiful property, right by the water, and it's
Mm,
basically like a little hidden gem that we're so excited to get started. So that one we're gonna transform. So currently the property itself is cash flowing great, and
wow.
in the summer they don't open, they how many months are they open? Like,
September, May through September, so like 4 or 5 months out of the
it's
year.
really not that long.
Mm.
So we're, pushing the envelope once again because that's what we do. And, we're trying to maximize. I think that's the better word. Like we're trying to maximize the best that we can for the property, for the timing that we keep it open and everything. So I'm really excited. We're working with a really cool team for, I'm designing, lead designer, but I'm also working with another designer and marketing team. So I'm really excited for that.
That's gonna be awesome. I wish you guys the absolute best in the hotel. Hamptons is a great location. So I'm just excited to see you guys promote it. I see your Instagram as well. Love that you guys are sharing your journey and inspiring other couples, really. Just the fact that you guys are a husband and wife team, you don't see that too much. So it's just very inspiring to see that you guys are working together on this, which is why I asked for your tips. So do you have any last tips for anyone in their hustle to holdings journey?
I do. I talk a
Let's
lot.
I love it.
Yeah, it's something that we've been discussing a lot, over dinner or a little after. We talk about pacing ourselves and not comparing yourself to, anyone out there on social media. A lot of times, one of the things that we're learning is like social media is a great place to, look for things, but I think the biggest indicator is within each one of us. So as great as it is to get information out there, I think it's important to really just go back in and see what makes sense to me, to our business, to our goals. And I think a lot of times it's funny, but real estate becomes almost like a little competition. And you go to these network events, and how many doors do you own? Like, it
Yeah.
doesn't matter? But then at the same time, I get it, people are trying to compare. And if you say a big number, which used to be like, wow, this person owns 100 doors, like, this is amazing. But then I started learning how much of that do you actually own?
Right. I agree. Like I only have 7, right? But at least that was able to get me out of my 9 to 5. So at that point it's like at least these 7 doors are working for me, but now I just want to see what other like areas I can cash flow from, which is the
Mhm.
hotel. So which is why I decided to transition directly into commercial. So I agree with you. It's not about the doors you have, but what it's doing for you and your personal life and goals. I love that tip. Do
Yeah,
you have
and
one, Tom?
just that on piggyback on top of that is just like, stay off of social media. Like when you're like, trying to, especially when you're starting out because you're so vulnerable and you can see like these people like, I own X number of doors, I've raised X millions of dollars, yada, yada, yada. And then, if you're like, just trying to find yourself and your own path, then you're like, well, how do I do this? How do they do this? And it makes it just seem like so like far fetched and unattainable in a sense. So yeah, just you gotta, don't compare yourself, respect your own journey. And if it's something that you're really passionate about, you'll get to whatever place it is that you want to. But it's going to be on your own timeline, right? So don't think that you're going to be the next Chip and Joanna Gaines after project number one, right? Because like, there's many steps that you kind of have to take to get there,
Yeah.
to, achieve, this portfolio that you ultimately dream of. So yeah, I would just say just kind of respect that, don't compare yourself, and just guard yourself on social media, just because people use that to share their highlights, but they're not really, sometimes oftentimes they're not
So
showing the
true.
behind the scenes
They're
of
real.
what's the headaches, the long nights. I was tiling, after I log off at 5 o'clock on my W-2, and I'm tiling a bathroom until midnight, or we pulled an all-nighter a couple of times. After our honeymoon, we came straight back and we were again tiling the weekend afterward. So we went from paradise to, you know,
To
not
Thailand.
to tile purgatory, I'll say. But it's but you also have to be willing to put in whatever it takes to make that dream a reality, because it's not easy.
That's funny. Tile purgatory. That's a great one. No,
Yeah.
I feel the same way. On my wedding, I had to evict someone like the day of my wedding. Like so, so
Oh my god.
that's real estate investing for you, haha.
You're like, "It's my wedding day, just get out."
I'm like, please, I can't deal with you right now. I'm about to get married.
Oh my god.
But that's real estate investing for you. And at the end of the day, it does pay off, and you have to be passionate about it and passionate about building generational wealth. One last random question. What is your morning routine?
Ah, well, I mean, we,
Let's-
we have 2 kids, so it's survival. I mean, we're doing great, as far as like figuring out they're like going to school and stuff like that. So we kind of divide and conquer in a lot of sense. But the morning is dedicated to being mom and dad. So we just make breakfast, get them dressed, spend some time with them before putting them to school, and then afterwards we have like a 9:30 daily meeting where we touch base and we go through our kind of like
Oh,
checklist of things to do, make sure we're kind of both like in the loop with, hey, this is what I did yesterday, this is what I'm going to be working on, so on and so forth, so that we're both kind of have insights, because we're so busy oftentimes that like we could just kind of lose path of like what we're supposed to be doing. So that's a way to keep us accountable, but also kind of, informed as far as like what we're both doing and how we could help each other out if needed.
Wait, I love that. I'm so sorry. I can't log off after you told me that. So every morning at 9:30 you have a meeting with each other. I'm gonna start implementing that with my husband about what you have for the day.
Yeah.
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 Is there anything else that you guys do that I can copy to keep you each other accountable?
Uh,
So one of the things that we do, and it started off as a kind of like a joke because we both love beer, and we used to go to a brewery, and then we would have a beer and like start talking business, and it would become like a brainstorm session. So now, not always over a beer, but we have the brainstorm sessions that we do. We try to do it like once a month. What is it that we could do? What are they? Just kind of like it doesn't have to be concrete. It doesn't have to have a deadline, just like dream out loud with one another, start writing it down, and some things stick, some things don't, and we usually log those. And I was just reading that the other day. I was like, wow, that was like our first one. And it's just like, it just it's a fun way to start moving the needle without, the pressure, because it's a brainstorm session. And I think that's it's helpful. It's been
Yeah, it
helpful.
definitely is. You guys both are aligned, at least every month and daily even. So that
Yeah.
is awesome. I love that. So where can people find out more about you guys, follow your journey, look about your hotels, or even invest with you?
So I know Tom said stay off of social media, but don't. We are on social media too, just don't get inundated by social media. But at Liz and Tom Invest on Instagram, that's probably gonna be the easiest way to follow along everything, our journey. We try to stay there as much as we can. And yeah, we'll have like the websites and everything for the motels as they come in, but that's still a work in progress. So at Liz and Tom Invest on Instagram.
Yeah, and our business website is bonocapitalgroup.com. So if you want to learn a little bit more about our backgrounds, our kind of our overall portfolio and experience, we have some insights in there. And we also have ways to, just email us and, schedule meetings and anything like that. So if anyone's interested, follow us on Instagram or also check out our website.
Amazing. I'll put all of the information down in the show notes as well so you guys can follow along their journey. And thank you guys so much. It was such a pleasure speaking with you guys. I mean, first couple to have on the podcast, and you guys are very, very inspiring. I definitely need to introduce you to my husband one day.
Yes.
But
Whenever down in Florida, I mean, just give me any excuse to get out of
yeah, you have Florida, right? You're interested in Florida. Might as well come down. I'll show
Mhm.
I'll show you guys around. Thank you guys so
Absolutely.
much.
Thank you.